Welcome back. We are at it again with Palantir's Q4 earnings report, which is just days away at this point. Today I have estimates and projections from a friend of the channel, Jake Uri, to share, as well as some of my own in this presentation that I want to run through. I think it'll be a very good last place to review before Palantir actually announces the numbers on February 17th, which is Thursday. They will be doing so before market open at around 7 a.m. with the earnings call at 8 a.m. So what am I looking for? Well, first of all, it's making progress on some of the world's best software, as they so often say. With their product offerings, their alignment in the macro, how important it is that they're able to deliver this software, and what it really means in the context of the current environment. Network effects with the ecosystem that they're building, their culture, but more so if they're going to address the SBC, how they're thinking about SBC into the future, any changes there, and growth by design with the sales force that they're building, and also future optionality, which is really, I think, what I want to hear most from Alex Karp, who will, as we know, be attending the call. He will be taking and answering questions from investors, those questions being the ones submitted on Say Technologies platform, and he will also be responding to investors for the first time, which does signal confidence and, of course, is great to get the CEO on the call. Very excited about that. But as I mentioned, this is what I want to know from Alex Karp, the long-term future and mission of the company. This is a little graphic that I've been helping make for Dave Lee for his application for Tesla, not application in the sense of software, but just application in the sense of his sharing on YouTube. And Elon actually liked the tweet with this Tesla related, so that was kind of cool. But anyway, I'm repurposing this and I'm reusing it as the idea of these S-curves. Now, S-curves of adoption. First of all, we think of Palantir starting out as really being there for the government, and with Gotham, I mean, still is and will continue to be, but that really is how the company started and not where the company will end up eventually. I think Foundry is ultimately going to be much more important for the company, the commercial side. We've seen the growth there, but what can Alex Karp, what can the management team say about Foundry? How can they describe it that will prove it is going to be so much more? Because right now, this is just my interpretation of it. But also, what comes after Foundry? Not just on the product side, but how should we be thinking about the next generation of Palantir into the future? Now, I think that could definitely come from builders. But why did I write builders? I'm not just talking about Foundry for builders. I'm talking about the idea that a company will use Palantir's Foundry to then actually create its own product to release onto the market. So it's essentially B2G, B2C, B2B2C, as I have said before, or actually B2B, I guess I should have said, not B2C. And actually, that is the B2B2C, I think, is the next leap for Palantir. Because if their products are able to be a platform, if a company uses Foundry to create a platform for just customers, I think that's going to be huge. I think that's the next leg up after Foundry itself. But I could be totally wrong. And that's what I want to hear from Alex Karp and Palantir management team is what comes next? What is after Gotham? What is after Foundry? How should we be thinking about this? They don't have to exactly say the products. Of course, they're working on things and they're not entirely sure what the future holds, but how should we be thinking about this? What comes after this next generation? That's really what I want to know as a long-term investor. Okay, next on to the historical earnings. So I've showed this a bunch of times in my videos, but here are the Q4s just so we can get a sense. This isn't going to be perfect, but we have 2019 Q4 revenue of $229 million, which was an increase of 21%. But then we got 2020, when Palantir was actually their second quarter as a public company, which was $322 million in revenue, 11% increase. And now we are on to right here, which is Q4 2021. These underlines are estimates. We have guidance of 418 million, but look at this change right here. If Palantir is able to deliver above 11%, which is what they did last year quarter over quarter, and closer or even in between these two for Q4s, if they're able to do between those at around 16% year over year compared to these quarter over quarter increases, let's just say it's 14%, we could be looking at $450 million in revenue, which would be a 7% surprise over the $418 million in guidance. Now, why is that important? Well, right now, that $418 million in guidance is only 8.6% quarter over quarter growth, which is under 30% year over year growth if you look at that, and I've calculated it correctly, hopefully. So if we're able to get 14% and even above, that would correspond to almost 40% year over year growth, which would be much, much better and much more exciting for the company. So I just wanted to recap that one more time. The historical earnings, they have been above into the double digits in a percent change terms, whereas Palantir has been guiding lower. Hopefully they'll beat it. I think if they come in line with guidance, I think that would be seen as a miss, and I would be disappointed. I'm sure the stock would probably fall, but who's to say? And I think something closer to the $450 million in revenue would be seen as a huge beat, barring any other adjustments in the rest of the earnings. But I think $450 million, I don't think they're going to quite get there, but anywhere close to that would be awesome. So now we're on to some projections along the same lines. These are by Jake Uri. You need to follow him on Twitter. You need to subscribe to his YouTube channel. Incredible work, always high quality. He does not have the following that he deserves, so please go follow him there. That's his handle. I put it here as well. Here are his projections. I asked him to join me because I always value his voice, but I will be walking through because he could not make it today, which is totally fine. So here we have customers next to revenue, next to adjusted gross profit, next to adjusted net income. So we see all have been trending up, albeit fairly linearly, I guess you could say. And what I'm really looking at in this graphical representation here is the customer count. We've seen the customer count really just moving sideways, but from 2020, it really was not increasing substantially. We've seen some growth as Palantir has onboarded a sales team, and it's doing much better, but that growth needs to sustain. How can Palantir prove that their sales team is doing incredible work, and all this stock-based compensation, all of these expenses going towards that is worth it? Well, that's increasing the customer count. That is what we need. So we see the revenue as well. Jake is actually forecasting very close, if not exactly, to $450 million in revenue, which I said I would be surprised if they can actually hit that or be above it, but that would be great. So I'm guessing this is a little aggressive here, but that would be awesome. So yeah, you can just see how much of a difference that would actually make quarter over quarter. That would be huge. Now we got the adjusted gross profit increasing as well. It's just the core business getting better quarter over quarter. That is what everyone is expecting. And adjusted net income, of course, not too much of a change. And these are adjusted figures, which actually removes the stock-based compensation. Okay, on to the second of his projections, which is on the expense side. I don't have too much to say here. I'm sure their expenses are trending up over time. Yeah, not too much to talk about unless we see a real outlier in their actual announcement. So on to the third of four of his projections. Here we have the adjusted gross margin, contribution margin, which they talk so much about, adjusted operating margin, and on this side we have the long-term targets. So we've seen Palantir getting better and better quarter over quarter, except we started to stagnate a bit, which is just fine, but we have Jake forecasting some substantial improvements along these lines, with Palantir getting closer and closer to its long-term targets, which would be great to see. You may say, oh, these long-term targets, is Palantir ever going to reach those? Well, actually, I think along the lines of Palantir being fairly conservative in their public relations, or their investor relations, I should say, I actually would not be surprised if they actually get to these sooner rather than later. And Jake is actually forecasting an adjusted operating margin of, very close to, if not better than, their long term, or in line with their long term target. The contribution margin has some room for improvement. And then, of course, the adjusted gross margin is also getting very close in these projections. You'll see these are relatively close. And Q4 pretty strong last year in terms of these metrics. So let's see what Palantir can do. But these I would be looking out for to see how close Palantir is doing to these projections. But also, quarter over quarter, are we seeing improvements in all of these categories? Okay. And this is projection number 4 of 4. We've got revenue year over year and adjusted OPEX year over year. This is actually one of my favorite things. I'm glad it's an adjusted number on the operating expenditures. I love looking at the revenue and comparing it to the OPEX because I want to see the revenue on every quarter here growing faster on a year-over-year basis than the operating expenses, which we have seen from Palantir all along the way. You'll see actually their revenue, like we want these two lines to be farther and farther apart. They have been coming closer together. Now, hopefully Palantir's revenue, as we're just talking about, can actually explode upwards, but Jake is expecting that to also be the case. So hopefully their operating expenses can come in at less than expected, and we can see more of a widening of the gap, which would indicate operating leverage. At least that's what I would be thinking. And then we're on to Jake's work on the revenue geography, in terms of geography, the segmentation there. So we've got the US, the UK, France, and the rest of the world, which Palantir doesn't break out. I think in one of my other videos, I was able to figure out what rest of the world meant. I believe that was in my FactSet video if you want to go check that out, but doesn't really matter in this case. We've seen a lot of the growth coming from the United States, of course, on the commercial side. I wouldn't be too worried about any of this. We really want to see all growth from all different places, all geographies. We want to see the growth increasing there. But again, this is something we more have to wait and see rather than draw conclusions ahead of the release. And then the revenue product segmentation. Here we've got the government and the commercial year-over-year growth. We've seen the government growth 76%, 66%, 34%, where compared to the commercial growth at 19% coming under the government, 28% under the government, but then 37% coming in at a stronger growth rate than the government. So what's the bottom line here? We want to see more growth from the government so as to not be stagnating, or of course it's not going to be declining, I wouldn't say. We want to see both of these sectors really increasing for Palantir. We don't just want to see commercial growth being much higher. We want equal and great amounts of growth from both of the products, Gotham and Foundry. So of course commercial growth is top of mind for a lot of people, but Gotham and the government's side really needs to continue up its strength as it is a very, very, and the largest core portion of the business. So something to keep an eye on there when Palantir reports. And we've got here a graphic by Jake on the customer acquisition, talking about beginning customers, adding SPACs, Foundry for Builders, traditional customers, total customers, and then what you actually end up with at the end of the quarter, which is the ending customer count. So this is all for 2021 right here. This is his actual estimate at the end of the year. So we came into the year at 150. So that's interesting. Yeah. So the beginning of Q1, so I guess you could say Q4 2020, it was 139 customers, and actually finished Q1 with closer to 150. So about 10 customer increase. So that was before the SPACs and the Foundry for Builders. Then we had a bit of a bump from SPACs, which were 7, but 13 traditional customers were added. So that was a total of 20. And then we saw a bump from 12 SPACs in Q3 2021 and 5 Foundry for Builders as well. We saw actually 17 traditional customers come in, which was huge. Here we are coming into Q4 2021, at 203 customers. So we've broken past 200 customers, a pretty big milestone, but it's worth noting that some of those are SPACs and some are Foundry for Builders. Not a lot, of course, but not all of them are traditional customers. So Q4 2021, what is Jake Uri forecasting here? 3 new SPACs, 10 Foundry for Builders, and an addition of 25 traditional customers. So if Palantir is able to do 25 additional customers, that would be awesome. I do not think they can actually add that many. I would love to be proven wrong on that. 25 would be absolutely awesome, but I do think the SPACs and the Foundry for Builders, those are probably more in line with what will actually happen. Traditional customers coming in at 25, again, would be huge. Not expecting it, but that would bring the total ending customer count to 241 customers. So you'll see here that the SPACs really don't have that much of an effect. Foundry for Builders even less, but what really matters is the traditional customers. The ones that are actually signing contracts, where those contracts actually yield earnings and income for Palantir. Of course, that income can get weighed against by other things, but very important for the core business. So speaking of SPACs, this is my analysis of the SPACs that I have found for them, and I believe this is almost all of them that are, of course, public and have SPACed. And yeah, so these are their tickers. These are how many shares. This is the amount. I know I misspoke in my video. The total dollar result is in millions. I'm not saying it's 115 billion. I'm saying this is how Palantir presents it on their quarterly financials, as you will see if you actually go and look. I guess of course, it's in thousands if you want to think of it that way. So I'm seeing that Palantir has lost 16 if you want to call it that, $1 million. I think they will have to do a write down, meaning that they quote unquote lost money, which will hit their earnings per share. Might surprise some analysts if they're not paying attention, which could cause a bit of a downturn. I'm not expecting too much of that because I think that should be easily backed out, as this is fairly unconventional, but I think the analysts understand these are partnerships, strategic partnerships, and Palantir is not actually trying to trade SPACs. This is more of a long-term play. The losses, while they might be there, don't really matter to the long-term story. So potentially could be a risk for this quarter with their SPACs down. I don't know. We'll have to see how much of an effect it has and what the reaction is. So a little too early to speculate on that. And of course, a lot of this stuff could already be baked into the stock. It's really so hard to tell with the market being down so much if there is a risk here, if there is not. I'm not sure why there's a negative there, but I think these are all negative. So anyway, last thing I wanted to mention is that what I really want Palantir to be able to hit home is what they're able to do so unique as a business, which is taking the intangible information, turning it to actionable insights for alpha generation. They need to be able to prove that they do this better than anyone, and they need to be able to prove that their alpha generation can make this business succeed well into the future. So they need to continue to prove the evidence of alpha, functional alpha, time-based alpha, and monetary alpha. I would love for them to share exact impact studies and just talk about that on why what they do is so important and the success it has. So very lastly, if we just touch on the growth, I think, as I was saying, if Palantir is able to come in close to $450 million, that would be at the 40% growth rate. Of course, these are years, but a 40% really is an enormous difference compared to 30% growth rate. So if we just extrapolate Palantir's 30% growth rate year over year is what their guidance was for just for this one quarter versus 40%. It is a huge difference. 40% would definitely be a beat and, in my opinion, would send the stock higher, while 30% would be the opposite of that. So the question is, which way is Palantir going to be headed just for this past quarter? Of course, doesn't entirely make a huge difference, but it will make a difference for the stock once the earnings happen. Hopefully, Alex Karp can take the helm and lead this call very well. I'm looking forward to it. Hopefully, this earnings recap was useful, bringing in some of Jake Yu's work, and I really appreciate his sharing that with the community. I would love to hear more from Alex Karp on the mission and the long-term future. And yeah, on all of these different things, it will be very exciting. February 17th, and I cannot wait to hear more about Palantir's pivotal Q4 earnings release, as I would put it. Thank you for watching. I'll catch you in the next video.